Welcome back to Market Call here with David Burrows. We have Richard on the line from St. Thomas. Richard, what's your question for David?
Yes, Greg and David. I'd like to ask about KKR. The price has come off from its highs last summer, and the U.S. dollar has been weak. I wonder if it would be time to add a little more to our position. Thank you very much.
Great question. So, Richard, a big factor for KKR is how private equity is doing as a group. And it's important, I think, to know right now that valuations in private equity investments have gone up a lot over the last number of years as a lot of money left the publicly traded stock market and wanted to invest in private companies that weren't subject to day-to-day movements. Because that sector or that asset class did so well over the last number of years, the multiples of earnings that investors were paying expanded and expanded and expanded. And I would liken the private equity world to what happened in the late 90s in the public market. The multiples are just really, really high. So it's hard for them to get their exits by taking these companies public. So I'm less interested in private equity. And I think that this is actually the time to be focused on buying public market equities, which have been out of favor for 12 or 14 years, and outside of the last 2 years of rally. And I think that it's likely that money is going to slowly rotate back to public market equities over the next number of years, where valuations in many cases are very, very reasonable relative to what you could get in fixed income or private equity. So I would be less interested in KKR, and as I said earlier, more interested in something like BlackRock, which is going to be a beneficiary if public markets do well.
All right, we have Jim in Thunder Bay on the line. Jim, what's your question for David?
Yes, good evening, gentlemen. I just want to give a shout out there to your gentleman that works the phones. You're doing a great job today. I appreciate it. David, just wondering about Goldcorp. Where do you see this company in the next 1 to 5 years? You hear a lot of good things, negative, positive, and ranges from 800 up to 2,000 for the price of gold. So could you just give me your evaluation of the gold market these days? I would appreciate it. Thank you.
Sure. So, Jim, I think for many people who watch this so regularly, they know I was quite bearish for a couple of years on gold. And, sectors go from being in favor to out of favor and ultimately unloved, and prices get really low and things go the other way. So I think that the tide is starting to come in for the gold sector. We started putting on positions at the beginning of this year. We have in our equity portfolios, I think 12 or 14% would be precious metals. And I think that there's lots of opportunities for those companies that may be in a position to make acquisitions. It's been very hard for junior companies to get funding. And here we are in a world where we've got interest rates, in 2/3 of the world, negative territory. So the cost of capital is very low. The opportunity cost to own gold is very low. There are lots of companies that are behaving quite well. Barrick would be one, Goldcorp would be another, Agnico Eagle would be another. We'll talk about another one tonight as one of our top picks. So I like the sector. I think that there could be some legs to this rally. We're going to have to see. Again, we're going to use stop losses underneath our positions. And we'll only add to them if the positions are working their way higher. We don't average down. But I think that those companies that are in a position to take advantage of the distress could ultimately win, and I think Goldcorp's one of those companies.
All right, Carol in London's on the line. Carol, what's your question for David?
Brookfield Renewable Energy, and I wondered if he'd buy it here, David, or what countries it operates in. Thank you.
Okay. So Brookfield Renewable, of course, has a number of assets in renewable energy. Utilities and renewable energy companies are doing quite well right now. So we don't own Brookfield Renewable. It's one that we probably could take a look at. They have a great list of assets. I would have no problem owning the stock.
Yeah, the dividend yield looks quite nice, 6.34%, and the street, as far as they're concerned on this one, not widely covered. 7 buys, 4 holds, and 1 sell. We're going to be back after this short break. We're going to do top picks with David Burrows.